This question is in regard to the no tax on tips provision that was in the big, beautiful bill. They're not saying something egregious. They're asking a question because they don't know, so don't attack them. This person says, so let's say a person in a gratuity type position has $25,000 in tips withheld in a taxable year. Would they get a tax refund of $25,000? No, they would not. The government at the end of the year is not cutting them a check for $25,000. It might help their refund, perhaps, because what it does is it lowers your taxable income, your adjusted gross income. So, I have my own business. I have a company that through which I do all my social media and sell my merch and all of that stuff, right? So, I buy pens. I whatever I make. Pick a number. Use a nice round number. $100,000. The government is going to tax me on $100,000 worth of income, worth of revenue for my business, and I'm an LLC, so it's a pass through. I go buy a package of pens for $10, and that's not the number, but we're going to use nice round numbers. I buy a package of pens for $10. What happens is I now reduce what I'm paying taxes on. Instead of $100,000, it's now $10 less. Okay, and then I buy an iPad for my company, and it's $1,000. Then I get to reduce by another $1,000 what I'm paying taxes on. So I'm no longer paying taxes on $100,000. I'm paying taxes on $100,000 less any of these write-offs, any of these things that I get to write off or claim as business expense or things of that nature. And so every time I have a new expense, if I get on a plane and I fly to Seattle and I make content, I get to write off a certain portion of that. That lowers the amount of revenue I pay taxes on. Same thing will happen with the tipped employees. You work in a restaurant and you make a round number. You make $50,000 this year, and $25,000 of that was on tips. Well, the government says you got to pay taxes on $50,000 worth of income, but because of this, now we're going to lower the amount you pay taxes on. Now you're paying taxes on $25,000 worth of your income instead of $50,000. They're letting you not pay taxes on that first $25,000. It lowers your adjusted gross income, and it means that you're paying less in taxes over the course of the year. Now, what that could result in, and might for many people in the service industry, is if they lower their adjusted gross income, if they lower what they're paying taxes on, they could get a bigger overall refund. But they're not getting, okay, you had $25,000 worth of tips, we're going to write you a check for $25,000. No, that is not how that works.